Title: Where to Invest During a U.S.-Iran War, Smart Opportunities in a Volatile Market. When a geopolitical conflict like a U.S.-Iran war escalates, global financial markets become highly volatile. Stock indices often fall due to uncertainty, but not all sectors suffer equally. In fact, some industries historically perform very well during times of war. Smart investors don't panic. They rotate their money into sectors that benefit from rising oil prices, defense spending, and safe haven demand. First, the energy sector becomes one of the biggest winners during a U.S.-Iran conflict. The Middle East is a critical hub for global oil supply, especially through the Strait of Hormuz, which handles around 20% of the world's oil shipments. Any disruption immediately pushes oil prices higher. Invest. Recent developments show oil prices jumping sharply due to attacks on energy infrastructure and supply fears. This creates strong profit opportunities for oil companies. Major firms like ExxonMobil, Chevron, and Shell tend to see their stock prices rise as crude prices increase. Investors looking for short to medium-term gains often shift capital into oil and gas stocks because higher prices directly boost their revenues and margins. The Guardian. At Intellectual. Second, the defense and aerospace sector is another major beneficiary. War leads to increased government spending on weapons, surveillance systems, and military equipment. Companies like Lockheed Martin, Northrop Grumman, and RTX typically see rising demand for missiles, aircraft, and defense systems. Investing.com. Historically, defense stocks surge during geopolitical tensions because governments increase military budgets and long-term contracts. Even in the current situation, analysts expect continued growth in defense spending globally. For investors, this sector provides relatively stable returns during uncertain times. At Intellectual. Third, gold and safe haven assets become extremely important. During war, investors move money out of risky assets and into safer stores of value. Gold is the most popular safe haven investment and often rises significantly during geopolitical crises. Aura. Markets. In fact, gold prices have already surged as investors seek protection against inflation and uncertainty caused by rising oil prices and economic instability. Investing in gold ETFs or gold-related stocks can help balance risk in a portfolio during war conditions. At Intellectual. Another important area is defensive stocks, such as utilities and healthcare. These companies provide essential services that people need regardless of economic conditions. Even when markets fall, these sectors tend to remain stable or even show gains. Recent market data shows that utilities and healthcare stocks stayed positive despite overall market declines during the conflict. MarketWatch. On the other hand, investors should be cautious about certain sectors. Airlines, travel, and transportation companies often suffer during war because fuel prices increase sharply, raising operating costs. Similarly, high-growth tech stocks can face pressure due to rising interest rates and economic uncertainty. Acumen Group. It's also important to understand the risks. While some sectors benefit, the overall market may still decline due to fears of recession and inflation. Analysts warn that prolonged oil shocks have historically led to economic slowdowns. This means investors should avoid putting all their money into one sector and instead diversify their portfolio. Business Insider. A balanced strategy during a U.S.-Iran war could include a mix of energy stocks, defense companies, gold investments, and defensive sectors. This approach helps reduce risk while still capturing opportunities created by the conflict. In conclusion, war creates uncertainty, but also opportunity. The key is understanding which sectors benefit and which ones suffer. Energy, defense, gold, and defensive stocks are typically the most profitable areas during such times. Instead of reacting emotionally to market drops, smart investors adjust their strategy and position themselves to take advantage of global events.